Hey traders, welcome back. It is Friday, February 27th, and it is a beautiful day outside. So just decided to do this little report outdoors today. It's wonderful. So anyway, let's get into the news. Markets just wrapped up recently, and it was a rough day. A rough day and an even rougher month of February. So let's break down exactly what happened and why it matters for your trading account. So the S&P 500 closed down 0.43% at 6,878. The Nasdaq dropped 0.92% to land at about 22,668. And the Dow took the biggest hit today, falling 521 points, which is a 1.05% loss. And it closed at 48,977. But those single day numbers only tell part of the story, because for the entire month of February, the Nasdaq posted its worst monthly performance since March of 2025. So nearly a whole year, down more than 3%. And the software sector did even worse. The iShares Expanded Tech Software ETF, ticker IGV, is down nearly 10% just this month and almost 23% year to date. So that's a pretty substantial drop. A sector that was supposed to be riding the AI wave is bleeding out. So what spooked the market today? It was two big catalysts. First, the inflation data. So the producer price index came in hot. January PPI rose 0.5% when Wall Street only expected a 0.3% rise. But the real shock was core PPI, which strips out food and energy, and that jumped 0.8% against an expectation of just 0.3%. So that's more than double the forecast. CoreWeave, the AI cloud infrastructure darling, cratered roughly 20% today. Revenue grew 110% year over year to $1.57 billion. That's actually a beat. But Wall Street doesn't trade the past, it trades the future. And the future CoreWeave painted wasn't pretty. Q1 guidance of just 1.9 to 2 billion against expectations of 2.29 billion. That's a $290 million miss at the midpoint, and that's not a small number. The company also dropped a bombshell. It plans to spend 30 to 35 billion on capital expenditures this year, more than double last year. This message from investors was clear. We want profits, not just promises. Meanwhile, fintech company Block, which is Jack Dorsey's payments firm, Jack Dorsey of Twitter fame, announced it's laying off more than 4,000 employees. That's nearly half of its entire workforce. The economic ripple effects from AI disruption aren't theoretical anymore. There were a few bright spots. Netflix jumped more than 7% after stepping away from the bidding war for Warner Brothers assets. The market rewarded that capital discipline instantly. And Dell reported record annual revenue of $113.5 billion, with over $64 billion in AI server orders. The fear gauge VIX crossed back above 20, signaling elevated uncertainty heading into next week. So here's the lesson for small account traders. When inflation data surprises and guidance disappoints in the same session, cash is definitely a position you should think about having. Or just do like what I do and go short when it looks like it's a bad day. I mean, that's what I did today. I shorted Apple and I went short on the SPY and had winning trades on both. So I've said this a million times, even though my preference is to go long and to have things, always be green days and profit that way. When it just looks like, according to the charts and according to the candlesticks, it's going to be a red day and you see that confirmation that everything's fallen out, don't be afraid to go short and jump on some put contracts. That's exactly what I did today, and it worked out perfectly. So, once again, another winning week for me, trading the same way that I always trade. But next week, watch the February CPI report. That data could either calm these inflation fears or pour gasoline onto the fire. So that's it for today. Hope you have a good weekend. See you back here next Monday. Take care, everybody. Bye-bye.